3 numbers decide if you get to live in that apartment. 3 numbers decide if the bank will let you buy a car. 3 numbers generated by a private corporation you've never met, using criteria you'll never fully understand, control more of your life than your own government does. And you probably checked them this morning. This is the credit score, and it's not what you think it is. Most people believe the credit score measures responsibility. That's the story we've been sold. Pay your bills on time, keep your balances low, and the algorithm smiles on you. The responsible people get rewarded. The irresponsible get punished. It's fair. It's logical. It's meritocracy in action. Except it's not measuring responsibility at all. It's measuring obedience. And there's a difference. The credit score doesn't care if you're wealthy. It doesn't care if you have $1 million in cash sitting in your checking account. Pay off your credit card completely every month because you're financially prudent? The algorithm doesn't like that. Close an old credit card you don't need anymore? Your score drops. Try to escape the system by living debt-free? You become invisible. The score punishes you for not playing the game. What the score actually measures is this: how profitable are you to lenders? How reliably will you pay interest, month after month, year after year, for the rest of your life? The person with perfect credit isn't the person with the most money. It's the person most perfectly enslaved to the debt cycle, most reliably making minimum payments, most consistent in their submission. Welcome to the most successful con in modern American history. A con so effective, victims defend it. A system so embedded in our culture that questioning it feels insane. We've been trained to see the credit score as a neutral measurement of our worth, a financial report card, an objective truth. But it's not neutral. It never was. The credit score is a tool, and like all tools, it was built by someone, for someone, with a very specific purpose in mind. That purpose was never to help you. To understand what the credit score really is, you have to go back to before it existed, back to a time when borrowing money was a human transaction, not an algorithmic one. Back to the early 1900s, when, if you wanted a loan, you walked into a bank and talked to a man in a suit. He looked you in the eye. He asked about your job, your family, your reputation in town. He made a decision based on his gut, his biases, his personal relationship with you. This system was corrupt, obviously. If you were the wrong color, the wrong religion, the wrong neighborhood, you didn't get the loan. The banker's prejudices were the algorithm. It was subjective, discriminatory, and brutally unfair. But it was also local. It was human. It was transparent. You knew exactly why you were rejected. The man who rejected you had to look you in the face. After World War II, something changed. America was building suburbs. Soldiers were coming home. The economy was expanding faster than it ever had before. And the banks had a problem. There weren't enough loan officers to process all the applications. The old system didn't scale, so they started looking for shortcuts, ways to make lending decisions faster, cheaper, more efficient. And that's when the engineers got involved. In 1956, an engineer named Bill Fair and a mathematician named Earl Isaac started a company in San Francisco, Fair Isaac Corporation. You know them as FICO. Their pitch was elegant. Instead of relying on subjective human judgment, why not create a mathematical formula, a score based on objective data, payment history, account balances, length of credit history, no bias, no discrimination, just pure, clean Mathematics. The banks loved it. It was faster, it was cheaper, and most importantly, it gave them legal cover. If the algorithm rejected you, the banker could shrug and say it wasn't personal. The computer said no. The civil rights movement was happening. Laws were being passed to prevent discrimination in lending. The credit score arrived at the perfect moment. It promised fairness through objectivity. It promised equality through mathematics. It promised to remove human bias from the system. And in some ways, it did. If you were a black family in 1970 trying to get a mortgage, the credit score might actually help you. The old racist banker couldn't just reject you for being black. He had to justify it with numbers. That was progress. Real progress. But it was also a trap. Because once we accepted the premise that the score was objective, we stopped questioning what it actually measured. The score wasn't designed to measure financial health. It was designed to measure creditworthiness, which is a very different thing. Financial health means, do you have enough money to live well? Can you cover your expenses? Are you building wealth? Creditworthiness means, if we lend you money, will you pay it back with interest? These seem similar, but they're not. A person with zero debt, a paid-off house, and $1 million in savings has perfect financial health, but might have a terrible credit score. Why? Because they're not borrowing money. They're not generating interest payments. They're not profitable to lenders. The system reads them as irrelevant. Meanwhile, a person drowning in debt, making minimum payments on 6 credit cards, living paycheck to paycheck with no savings, can have an excellent credit score. Because they're doing exactly what the system wants. They're borrowing. They're paying interest. They're trapped in the cycle. The algorithm loves them. The banks love them. They're a perfect customer. This is the con. We've been taught to optimize for the wrong metric. We've been taught to worship a number that doesn't measure our success. It measures our usefulness to creditors. Think about how the score is calculated. 35% is payment history. Have you paid your bills on time? That seems reasonable. 30% is amounts owed. How much debt are you carrying relative to your credit limits? Still seems fair. 15% is length of credit history. How long have you been in the system? Now it gets weird. 10% is new credit. Have you opened new accounts recently? And 10% is credit mix. Do you have different types of loans? Car loans, mortgages, credit cards? Here's where the mask slips. The algorithm rewards you for staying in debt longer. It rewards you for having multiple types of debt. It punishes you for paying off loans early. It punishes you for avoiding debt entirely. This isn't a measure of financial responsibility. It's a measure of long-term profitability to the lending industry. The most insidious part is the time component. Length of credit history is 15% of your score. This means the system rewards you for entering the debt game as young as possible and never leaving. The ideal credit score holder is someone who got their first credit card at 18 and has been making payments every month for decades, never missing a payment, never paying off the balance completely, just feeding the machine month after month, year after year, until they die. The score literally measures how long you've been a reliable profit source. Let's talk about what happens when you try to escape. Say you wake up one day and realize the game is rigged. You decide to pay off all your debt. You cut up your credit cards. You live within your means. You save money instead of borrowing it. You buy everything with cash. Congratulations, you just made yourself invisible. Your credit score doesn't go up when you leave the system. It goes down. Then it disappears. You become what the industry calls a thin file, someone with insufficient credit history. And here's the beautiful trap. Once you have no score, you can't function in modern America. Want to rent an apartment? Landlords check credit scores. Want to get a cell phone contract? Credit check. Want car insurance? Many companies use credit scores to set your rates. Want to turn on the electricity in your new apartment? Credit check. The system has made itself mandatory. You can't opt out without being punished. But it gets darker. The credit score has metastasized beyond lending. It's become a general-purpose surveillance tool, a proxy for trustworthiness. Some employers check credit scores before hiring. The logic is that someone with bad credit might be financially desperate and therefore more likely to steal or be bribed. Think about that. You lose your job. Your credit score drops because you missed some payments. Now other employers won't hire you because your credit score is bad. You're trapped. The score that was supposed to measure your past behavior now determines your future options. It's become a caste system, a permanent mark, a scarlet number. Insurance companies use credit scores to set premiums. They claim there's a statistical correlation between low credit scores and filing claims. Whether that's true or not, think about what it means. You're in a car accident. Medical bills pile up. You miss some credit card payments while you're recovering. Your credit score drops. Now your insurance premiums go up. You're being punished for being unlucky, for being human, for experiencing the kind of financial disruption that happens to everyone eventually. The system is designed to kick you when you're down. Here's what nobody tells you. The credit bureaus, Equifax, Experian, TransUnion, are private corporations. They're not government agencies. They're for-profit companies. Your credit report is their product. Banks and lenders are their customers. You are not the customer. You're the raw material. They collect data about you, package it, and sell it. You have no say in this. You didn't consent to be monitored. You can't opt out. And when they make mistakes, which they do constantly, you're the one who suffers. In 2017, Equifax announced a data breach. Personally identifiable information for 147 million Americans was stolen. Names, social security numbers, birth dates, addresses, driver's license numbers. Nearly half the country. The CEO sold his stock before the breach was announced. The company paid a fine that amounted to a rounding error on their balance sheet. Nobody went to jail. And your data is still out there, forever, being traded on the dark web. This is the company that decides if you're trustworthy enough to rent an apartment. The credit bureaus are also breathtakingly incompetent. Studies have found that roughly 1 in 5 credit reports contains a significant error. That's 20%. Accounts that don't belong to you. Debts that were paid off but still show as active. Bankruptcies that should have been removed years ago. And when you find an error, good luck getting it fixed. The process is deliberately difficult. You file a dispute. They investigate, which means they ask the creditor if the information is correct. The creditor, who probably reported the wrong information in the first place, says yes, it's correct. Your dispute is denied. You're stuck with the error. Your score stays low, and there's almost nothing you can do about it. We accept this because we've been conditioned to believe the system is too big to question. The credit score is like the weather. It just exists. You can't change it. You can only react to it. Check it obsessively. Worry about it. Let it determine where you live, what you drive, whether you can start a business. We've outsourced our sense of self-worth to a 3-digit number generated by corporations that view us as livestock, and we call this freedom. But it wasn't always this way, and it doesn't have to be this way. The credit score has only been widely used since the 1980s. That's one generation. Your grandparents bought houses, started businesses, lived entire lives without ever thinking about a credit score. It didn't exist, and society functioned just fine. Better, in some ways, because people understood that borrowing money was serious, that debt was dangerous, that living within your means wasn't just responsible, it was essential. The credit score changed that calculation. It made debt normal, safe, even virtuous. You need a good credit score to succeed, so you need to borrow money to get a good credit score. The tail wags the dog. Let's go deeper into the history, because this matters. Before FICO, before the bureaus, there was a different system. In the early 1900s, credit reporting agencies existed, but they were local. They collected rumors and gossip. If you didn't pay your tab at the general store, word got around. The local credit agency would note it. This was the era of moral judgment baked into lending. Agencies would report not just on your payment history, but on your character, whether you drank, whether you went to church, whether your wife was faithful. It was invasive and subjective and deeply unfair. Women couldn't get credit without their husband's permission. Minorities were systematically excluded. It was a nightmare. The Fair Credit Reporting Act of 1970 was supposed to fix this. It gave consumers the right to see their credit reports, the right to dispute errors. It put some limits on what information could be collected and how long negative information could stay on your report. It was progress, but it also codified the system. It made credit reporting official, legitimate, a permanent feature of American life. And once it was legitimized, it grew. The bureaus merged, consolidated, became massive. The algorithms became more complex, and the score became ubiquitous. By the 1990s, FICO scores were everywhere. Mortgage lenders used them. Car dealerships used them. Credit card companies used them. And then something interesting happened. The score became public. Before, you didn't know your score. It was a secret number that lenders saw, but you didn't. In 2000, Fair Isaac started selling scores directly to consumers. And suddenly, everyone was obsessed. Checking their score became a national pastime. Websites popped up offering free credit monitoring. Apps gamified credit building. You could watch your score tick up and down like a stock price. We became addicted to monitoring our own subjugation. The financial crisis of 2008 should have broken the spell. The credit rating agencies, the same mathematical wizards who gave us the FICO score, told everyone that mortgage-backed securities were safe. AAA rated, no risk. And then the entire system collapsed. Millions of people lost their homes, lost their savings, lost their jobs. The agencies had failed catastrophically, and yet we still trust their consumer credit scores. We still organize our lives around these numbers because the alternative is too terrifying to consider. If the credit score isn't real, if it's just a tool of control, then what? Here's the thing. The credit score is real in the sense that it has real consequences. It's not real in the sense that it measures anything meaningful about you as a person. It's a social construct, a shared hallucination. We all agree to pretend it matters, so it matters. But the agreement is voluntary. You can stop playing. It's hard. It's uncomfortable. Society will punish you for it, but it's possible. What would it look like to escape? First, you'd have to stop caring about the score, not just intellectually, emotionally. You'd have to accept that you might not be able to do certain things. You might not qualify for a mortgage. You might have to pay higher insurance rates. You might have to rent forever. But in exchange, you get freedom, real freedom. Not the fake freedom of having 17 credit cards and a high score. The freedom of owing nothing to anyone. You to pay cash for everything. Save up for a car instead of financing it. Rent an apartment from a landlord who doesn't check credit. Or buy land in a place where property is cheap and build something small. You'd avoid debt like poison. Because that's what it is. The score wants you to believe that debt is a tool, a lever you can use to build wealth. But for most people, debt is a trap, a weight that grows heavier over time. The interest compounds. The minimum payments stretch into decades. You're running on a treadmill, exhausted, going nowhere. The alternative is slower. You can't have everything right now. You have to wait. You have to save. You have to make trade-offs. This is unacceptable to a culture built on instant gratification, on consuming now and paying later. But it's also the only way out. The score has convinced you that you need things you don't need. That waiting is failure. That if you're not leveraging debt to maximize your lifestyle, you're doing it wrong. But that's the con talking. That's the algorithm in your head. Think about what financial freedom actually means. It doesn't mean having a perfect credit score. It means having no debt. It means your paycheck is yours, not the bank's, not the credit card companies, not the car dealerships. When you have no debt, you have options. You can quit a job you hate. You can take a risk. You can say no. The credit score offers the opposite. It offers access to more debt, more obligations, more ways to tie yourself down. That's not freedom. That's a gilded cage. The really insidious part is how the score has rewired our brains. We check it compulsively. We feel anxiety when it drops, pride when it rises. We've internalized the logic of the creditor. We judge ourselves by how profitable we are to banks. This is what successful social control looks like, when the victims enforce the system on themselves, when you don't need external guards because the prison is in your mind. Breaking free requires deprogramming. You have to recognize that the score is not you. It's not a measure of your worth, your intelligence, your character, your future. It's a number generated by a corporation to predict how much money they can extract from you over time. That's all it is. Once you see it clearly, the spell breaks. You stop checking it. You stop worrying about it. You start making financial decisions based on what's actually good for you, not what's good for your score. This is harder than it sounds. We're surrounded by messages telling us the score matters, financial advice blogs, credit monitoring apps, commercials for credit cards that promise to build your credit. Even well-meaning friends and family will tell you you're being irresponsible, that you need a good credit score to succeed in life. They believe this because they've been told it their whole lives, because the system has spent billions of dollars convincing everyone that participation is mandatory. But it's not. You are more than your credit score. You're more than a 3-digit number in a database. You're a human being with skills, relationships, dreams, agency. The score wants you to forget this. It wants you to reduce yourself to a financial profile, a risk assessment, a probability curve. Don't let it. Your worth is not calculable. Your potential is not predictable. The future is not determined by an algorithm built in 1956 by two guys in San Francisco who wanted to make lending more efficient. The way out is through simplicity. Spend less than you earn. Save the difference. Avoid debt. Pay cash. Build a life you can afford without borrowing. This advice sounds boring, obvious, but it's revolutionary in a culture addicted to credit. It's an act of resistance. Every time you choose not to borrow, you're refusing to participate in the system. You're starving the machine. And if enough people do this, the machine breaks. Of course, the machine won't let go easily. The entire economy is built on consumer debt. Credit card companies, auto lenders, mortgage banks, student loan servicers. They need you to keep borrowing. They need you to believe you can't survive without them. The credit score is their tool, their hook, the thing that keeps you coming back. If you escape, you're not just freeing yourself, you're threatening their business model. This is why opting out feels so hard. The system is designed to make the alternative seem impossible, but people do it. Every day, quietly, without fanfare, they pay off their debt. They close their credit cards. They buy used cars with cash. They rent cheap apartments. They live below their means. They build savings. And slowly, over years, they become untouchable. Not because they have high credit scores, because they don't need credit at all. That's true financial independence. And the credit bureaus can't measure it, can't quantify it, can't sell it, so they pretend it doesn't exist. You are more than your credit score. Say it out loud. Mean it. Because the moment you believe it, the moment you truly internalize it, the system loses its power over you. The number becomes just a number. The algorithm becomes just code, and you become free.